Vancouver's real estate market has entered a new phase. This is not a temporary slowdown, this is a new reality. Even reading a statement from the Greater Vancouver Real Estate Board, they're calling it a new normal. And that's important because the real estate boards are always very optimistic. So in today's video, we'll take a look at what's going on in the real estate market right now in 2026, what we can learn, and what are the new rules for the buyers and the sellers. At the first glance, it's more of the same. The market continues to be very slow, but I think there are a few key shifts that are actually happening. So in total, the number of sales we have seen is around 1,107, which is around 28% below what we have seen in January 2025. It is also about 31% below the 10-year seasonal average. That is an incredible slowdown. On top of that, there is a lot of inventory currently on the market, over 12,500 listings. That's 38% above the 10-year seasonal average. Looking at the numbers in a vacuum like this, things are not looking too great. However, the situation gets even worse if you look at some of the custom graphs that I created based on the statistics from the Real Estate Board of Greater Vancouver. These are the sales for every January going back 10 years to 2016, and you can see only January 2023 was worse in terms of sales as comparing to our January. We have the second weakest sales. That alone is not great news, of course. Comparing to last year, we see a pretty dramatic drop in terms of sales, although last year was a bit of an anomaly. This was before the tariffs, and I feel like there was a general sort of optimism in the market. A lot of people were expecting a spring recovery, and a lot of people were trying to get ahead of the curve. It will be very interesting to see how these figures look in February and March, because that's the time when the tariffs really took place and really started to affect the market. So right now, sales figures wise, January 2026 is not looking too good. If you also look at the number of new listings, we have seen some of the higher number of new listings, around 5,150. So that is the second highest, except for last January 2025, we have seen actually more listings. And again, that's due to the fact that there was a little bit of optimism in the market. A lot of people were trying to get ahead of the curve, ahead of the spring market. I can clearly recall a lot of sellers trying to list their properties for sale. Next, let's take a look at the inventory levels. And here is where picture gets a lot worse. In 2025, we saw quite a bit of inventory. However, 2026 blows all of the other years out of the water. We are seeing a lot of inventory for January. Usually in January, a lot of people are relisting the properties that they have taken off the market for the holiday season. However, this is, even sort of historically speaking, unprecedented territory, right? 38% above the 10-year seasonal average. And when you look at it on a graph like this, that really put things into perspective. If we also add the sales figures to this graph, I think this is kind of an important exercise, and it also visually shows you the slowdown in the market. You really don't want these two graphs to go the opposite ways, because that usually represents a slowdown in the market. And of course, that's exactly what we are experiencing right now. Looking at some of the other years, we have seen some slowdowns like 2019, of course, 2023, but nothing as drastic as what we see now in 2026. And even 2025 was pretty bad, but again, you can't really compare it to 2026. And if we look at the months of inventory graph, I think this really drives that point home. Just look at that. 11 months of inventory on the market right now. In other words, if the sales figures continue at the same pace, it will take about 11 months to sell out all of the existing inventory if no new listings come to the market. That is very high. I can't remember a time even last year where we have seen over 11 months of inventory, and now we have reached this number. The closest we got to this number was January 2019. We saw around just below 10 months of inventory. Next, let's take a look at the prices. These are the prices for detached houses for every January going back 10 years. And you can see that the prices have really taken a dip from 2025 they're down almost $150,000. That's a pretty significant price drop. It's one of the sharpest drops we have seen. 2022 to 2023 was a pretty significant price drop in the detached market, as well as 2018 to 2019. It was a similar $150,000 price drop. And of course, comparing it in the percentage points, that drop was even more significant, because $150,000 off of 1.5 million or 1.6 million is bigger in terms of the percentage as opposed to $150,000 off of 2 million. But nevertheless, it is still a very significant drop. And you can see that the detached housing prices are back to around levels of between 2021 and 2022. So about 5 years ago. And people that have bought at the height of the market are especially feeling the pain right now. Now, usually for the detached housing market, the sales cycle is a little bit longer. People buy for a longer period of time. So in general, most people are still okay, because if you bought around 2016, 17, 18, 19, you still have enough equity in order to sell right now and not lose money. But if you bought more recently, yeah, you're losing quite a bit. Now, if you look at the townhouses and condos, these two markets have a shorter sales cycle. People usually move into townhouse for a shorter period of time until they need to probably upsize to a house if they can afford it, or a duplex. And here the situation is somewhat similar, just less dramatic. Look at that price jump in 2021 to 2022. That was incredible. And since then, the prices have sort of stayed flat-ish. They did go up in 2024 and 2025, and now they're back to similar levels that we've seen in 2022. Again, here, the sellers are losing money on average, but not as much, because they tend to stay in townhouses for a little longer. Not as long as detached houses, but still, the sales cycle is pretty long. However, the condos, well, that's where the story gets very different. Here are the charts for every January prices for the last 10 years, and you can see that the prices have stayed pretty flat since pretty much 2018. Now, there have been some fluctuations up and down, but the benchmark price in 2018 was $665,000 roughly, and now the benchmark price is around $704,000. So clearly there is an appreciation, but not as much as you would assume would happen in around 10-year period, 8-year in this case. And also, if you take into account inflation and carrying costs, yeah, people are sort of staying flat where they were. So the condo market is really breaking this rule of a 10-year sales cycle, where a lot of people would assume you buy for 8 to 10 years and you will, quote unquote, make money. Well, here, that theory is proven to be wrong, at least right now. We will see where things go in the future. And of course, I'll try to keep you updated on this YouTube channel. Please subscribe so you don't miss those videos as they come up. In the graphs I just talked about, we were comparing January 2026 to January of last 10 years. Now let's actually compare January 2026 to last January. And this is the graph that will be ongoing for every month. I think it will be interesting to see and to track the sort of quote unquote market recovery or market depression. We will see which way the market swings. At the moment, the sales in 2026 are proven to be a lot weaker. So at the moment, the 2026 January is behind. And again, we will see how that plays out over the next few months. Moving on to the new listings numbers. Actually, we have seen less listings in 2026 than 2025. And again, as time goes on, this graph will be filled in, and I think it will be very interesting to track. Another thing that will be interesting to compare are the real estate prices. So here are the prices for the detached properties. You can see a pretty significant difference in prices. As I said, around $150,000. So that's no small amount. And again, we will keep track of that for the coming months. Next is the townhouse prices. Again, a pretty big drop here, almost $100,000. Next is the prices for condos, about a $45,000 drop in prices from January 2025 to January 2026. So it's very clear when you look at these graphs and you look at the statistics, January 2026, and generally speaking, the market moving into 2026 is not looking too great. Even the real estate board goes on to say that we are not sure how 2026 will unfold. There is no external pressures to have the prices go up. So it's very likely that the prices will remain flat, but they are hopeful for some pent-up pressure from the buyers because we had slower sales in 2026. So hopefully more buyers will come into the market. Again, that's at least according to the real estate board. I found it to be very interesting because, again, like I said at the beginning of this video, real estate boards tend to be very optimistic about the market. Part of their role is to give some confidence to both buyers and sellers. And in this case, they're sort of going, hey, we don't know how the market will unfold, but so far it's not looking too great. And if you look at the rental report, things are not looking optimistic there as well if you are a landlord, because year over year rental rates have dropped by about 7.5% in Vancouver. And if you break that down by cities, the Burnaby took biggest drop, 7.1% for a 1-bedroom condo and 8.6% for a 2-bedroom condo. Coquitlam 2-bedroom condos dropped even more, but Burnaby was something like number 2 or number 3 on this list, and now they're number 6 in terms of the rental rates. So really, there is a lot of pressure on the rental rates to go down, and it looks like they will continue to go down into 2026 because the population numbers are not expected to go up. We also are not expecting to see any more international students or temporary workers, or at least the increase in those numbers. So for the nearby future, these numbers will remain depressed, so to speak, and that of course will have an effect on the overall market. If you are a tenant and your rent keeps on going down, there is less pressure to get into the for sale market, and of course for the landlords there is very little incentive to get into an investment property at the moment. The last significant piece of news that has happened since my last real estate report was the fact that the Bank of Canada chose to hold interest rates at the current rate. And again, the expectation is not too much change in this front. It seems like the Bank of Canada for the nearby future will continue to hold interest rates unless things get a lot worse for the economy. But in general, that is the expectation. So that's why sort of the general expectation for the market is for things to continue as they currently are. This, by all accounts, is the new normal. I'll do my best to keep you updated on this channel about any updates in the real estate industry. Please subscribe so you don't miss those videos when they do come out. Also, if you enjoyed this video, please give it a thumbs up and subscribe to the YouTube channel. It takes a lot of work to put these graphs together, so I really appreciate you watching and subscribing. It means a lot. If you're here in Greater Vancouver and you need some help with the real estate, either to buy or sell, my contact information is below. Thanks for watching, and we'll see you next time.